Good morning. Welcome to the SEAF model. I'm Jack Kosar. This is effective for the week of June 15th, 2026. Let's get started. SEAF signals for this week. We retain real estate materials and we pick up healthcare. Key thing to note here is all the high scores. This tends to happen during transitionary periods where we're kind of working from a leader to trying to find that next leader. In this case, that was technology. 11 on the trading week. What we don't know is this a brief pause, or since we still have strong momentum on the tactical and the strategic, or is this the start of a new trend? As we are not projecting cash flows or predicting outcomes, we don't know yet, but we're just following the money. But just kind of a keeping a note here, this is quite abnormal here on the ranking side in the sense that we have 3 at 12, 2 at 13, and 1 at 15. It kind of indicates to me, especially we'll look at the heat map in a second, the market doesn't necessarily know what's next, or investors don't necessarily know what's next. Try to figure out exactly where they want to put their assets, who's going to be the next leader. Weakening scores for various reasons across the board. Materials very much so on the trading week last week, but having some strength in that tactical month and strategic quarter. Reverse for healthcare, showing some strength in the near term. But being a little bit held back by that strategic quarter. Financials, weak in the tactical month, middle in the strategic quarter, and some strength in the trading week. And then technology, strong outflow in the trading week, but overall strength in the tactical month and strategic quarter. So just, overall kind of a smattering of what is happening here. Energy bottoms out here at the bottom with a very clear signal across the board. Looking into our heat map. A couple things to notice. 3 of 5 days were up days in terms of assets flowing into the 11 sector spiders, with the largest day being Thursday of last week at a 1.4% increase. That was 611. That was the effectiveness of, I believe it was either a tweet or a comment stating, that the war was over again. So very much being geopolitically aligned here in terms of that asset flow day. Overall 1.33% increase in terms of assets flowing into the 11 sector spiders. As you can see here, though, for the first time in a while, we have kind of a more of a smattering outside of technology. So, technology's kind of been in that lead position in the sense that the majority of the money was flowing into one sector. It's starting to spread out a little bit. Financials showing up 0.44%. That's significant. 0.33% for healthcare and 0.2% for consumer staples. So we're starting to see a little bit of a spreading out. What we don't know here, are we spreading out because investors don't know what the next leg's going to be, and this is more of a shotgun approach, or is this a spreading out as in, the fact that technology was so heavily concentrated that it was starting to scare investors in terms of their risk concentration in just one sector. So, technology coming in worst for last week with a negative 1.03% outflow. But again, we had such strong accumulation that even with the big outflow, we retained tactical and strategic quarters at once across the board. So again, this could be a breather for the technology market. This could be the start of a new trend. We don't necessarily know yet. But just kind of a key thing to note here. Similar key thing to note, sector spider total AUM, adding up the 11 sector spiders into one number. Assets under management, this is what you have. We did cross back above that 21-day moving average. So we have this brief interlude and then gap up. What is that telling me? Investors were a little bit spooked here, try to get out of the way. And then like I said, that tweet calmed the market a little bit and assets flowed back in. So as of right now, back over that 21-day moving average. We'll see how we negotiate. We went through similar patterns really in the early part of this year where, we were negotiating that 21-day moving average for a while. We had a little bit of a larger break here, and then we went off to the races here. What I don't know here, are we going to get a break off to the races, or are we going to have that where we're consistently testing that 21-day moving average? That is yet to be determined, but As of right now, above the 21-day moving average. If you're new, we tend to see either sideways to up movement when we're above that 21-day moving average, and sideways to down movement when we're under it. So right now, things are looking on the more positive end as we've crossed back up the 21-day moving average, but we're still negotiating it. So we could, theoretically be into a similar pattern that we saw from December to February of last year. Heading into our rainbow charts, highlighting healthcare. Healthcare is currently our top spot, being led by tactical month and trading week with twos across the board here. Obviously, we've really jumped from a void down, jumped through into favored, picked up some nice relative in that matter, picked up some nice relative outperformance. Really would need to see some sustained flows out of healthcare in order to get that nice upward relative outperformance trend that we saw last fourth quarter of 2025, where we had while there was some myriad of points in there, nice little run up here with that sustained move into favorite. So we really need to see these flows sustain, get into that upper favorite. Like I said, we're still in that lower part, and definitely need some more flows over a week-to-week basis to really kind of catapult ourselves up into that upper favorite territory. Real estate, similar boat. We're starting to get that sustained into that favored. We're a little bit underperforming on the relative performance versus SPY for a second. We've got a little bit of a reversal there as real estate is now outperforming. As we stayed in favor. So real estate has been a good place to be overall. As we maintain that lower favored, I would like to, like I said, see these flows get accelerated in the upper favor, because that's when we get those nice big trends. But as of right now, we'll take what we can get. A little bit of relative outperformance here for real estate. Materials. So materials has been sitting in that middle favor to low neutral here for a little bit now. Underperformed during that massive tech run up that we saw. Starting to see a little bit of a life here as we pause. Seem to have a relative bottom and are starting to trend in the better direction here. Materials still sitting in favored, a bit low favored, and in that positive upward trend for relative performance after seeing a little bit of a run down in the underperformance versus SPY, again, led by that tech move. Wanted to bring up financials because it's knocking on the door. 1 in the trading week, 8 in the tactical month. So a lot of this is new money as we exploded into that lower favored area. Again, I really want to see where these flows happen on a multiple time frame. We had such a long 2-month period there where money was only flowing into technology. We're starting to see some of that dispersion. It's going to be interesting to see what sticks. The nice thing with the SEAF model is as we start to build up the accumulation, we get, part of that overall score is that trading week. So it'll move up with a strong trading week. But as we start to pick up that accumulation of tactical month or strategic quarter, the cream does kind of rise to the top here. So we're in a bit of a transitionary phase, trying to figure out what the next move is going to be, what the next leader is going to be, where that money needs to flow next the most aggressively. As of right now, like I said, 0.44 is significant on the trading week, so really strong inflow. It's just, can we sustain that inflow? We had a little bit of that peak run up going into December, January of last year. We kind of ran up into favored and then ran right back down. So it'll be interesting to see here, does financial stick? Is that something that we can kind of ride for a little bit longer? Or are we going to check mark our way right back out of it down in a neutral void? Next week is going to be a good week to understand that. But like I said, I did see that significant 0.4 number come in. So, there at least is a little bit of weight behind that weekly move. And then last but certainly least, we have energy. Energy has gone into deep void, well off that peak now in the relative performance versus SPY and trending in the wrong direction. We had that nice run up that the SEAF model caught here as we stuck in the upper favored. We attempted to make that move again. It failed down through, and now we're down into that deep void with that emerging downtrend in the relative performance versus SPY. That is all I have for this week. I look forward to breaking down the SEAF model with you all next week. And thank you.